We got it.
This is the Your Money Hour podcast. I am your host, Dakota Grady. Welcome to the show, everybody. Thank you for tuning in wherever you are. Today I have a guest, Shonette Sullivan. I want to make sure I got that right, of the Shekinah group. But before we get started, if you need help with personal finances, check out dakotagrady.com. And also, if you need help with accounting and taxes, check out theatdoc.com, theatdoc.com. And actually, Shonette, her business is called the Shekinah Group, LLC, and she also does accounting and taxes. So without further ado, Shonette, welcome to the show.
Thanks so much, Dakota. I'm excited to be on to join you today. So hello, everyone. I am Shonette Sullivan. I'm an accountant, tax professional, and an advanced certified QuickBooks Online Pro advisor. But before that, I was a wife, mom, and mompreneur. So I'm excited about today. So what I actually offer in my business, I offer tax preparation, bookkeeping, and QuickBooks training and consulting. For those business owners who do not have the cash flow to hire a full-time bookkeeper, I offer training and consulting as well in QuickBooks Online. So I'm excited to be here today, Dakota, and look forward to the conversation.
Awesome. So talk about the transition from being a stay-at-home mom into an entrepreneur.
So actually, Dakota, so I came from corporate America. And so I actually went full-time. I wouldn't say it was a side gig, but it was a side hustle, side gig. I've been in business for 18 years. And so with that, I was in corporate America doing my business on the side. And so in 2019, I left corporate America. And once I left, I decided to do it full-time, but doing it full-time while being a stay-at-home mom. And so that was a challenge. That was definitely a challenge, especially with COVID-19 hitting in early 2020. Again, that was a challenge, but what I had to do was learn how to balance. I had to learn how to, and I don't know that I've achieved that balance. Balance is not the right word because I haven't achieved that yet. You just have to shuffle. You have to shuffle and make it work according to what day it is and according to what priority is. That's the word. You have to prioritize throughout the day. So it's been an interesting transition. So I can't make that. I don't want to fudge the words. I want to tell you the truth. I have not found the balance yet.
Like a juggling act, right? Sounds like.
Yeah, it is. It has been. So some days are great and some days are not so great, but you have to go with the flow. So
yes.
Yeah.
So we met about 2 months ago, I think. We talked about business. So let's dive into the business. So we both do accounting. Mm-hmm. What have been some things you've seen for your business that you serve your clients that your clients are doing right? And then what thing that they can improve on in their businesses?
The first thing that they're doing right is that they're seeking my services. So that's the first right step, because that's one of the things that many business owners don't do. They're intimidated. It requires a great level of vulnerability, and many businesses don't want to have that vulnerability. So the first thing that they're doing right is that they're seeking services, and your clients are doing the same thing, Dakota. So that's one thing that they're doing right. Another thing is that they're just the mere fact that they're entrepreneurs. It takes a whole lot to be an entrepreneur. Not everyone is built for being an entrepreneur. So that's the second thing that they're doing right. So I just give kudos to anyone who's along the journey, who has been able to stick it out. Whether you work a 9 to 5 in addition to your entrepreneurial journey or your entrepreneurial, I used the word side hustle for a while, but I'm trying to replace that word, but not yet. So, but yeah, just to have them, first, to have that vulnerability to hire services, and second is to kudos to them for being an entrepreneur. That's a feat in itself.
I agree, and because we know if we do the accounting and the taxes, then we know basically what they're making or not making.
Yeah.
So they have to be vulnerable enough to say, "All right, I want to show you my income, all my money."
Mm-hmm.
So, yeah. And then being an entrepreneur is not easy, as we both know, like you mentioned earlier. And I agree with you. Kudos to those, because everyone isn't built to be an entrepreneur. It's just that simple.
It is not.
And I think that's why there are more employees in the world than there are business owners.
Yeah. And I think a lot of people jump into entrepreneurship, and when they get out into the deep waters, sometimes they get afraid to admit that it's a tough feat. Sometimes, a lot of times it can be, no matter how experienced you are, there are many challenges. And so I think some people are afraid to do it, but then when some people jump out into the deep, they're afraid to say, this is too much, or I can't handle it, or whatever. And then some people just decide to turn around because it can be overwhelming. And so Yeah, for so many business owners, I would just say, it's okay to go back to your 9 to 5 and or work your business at the same time. If full-time entrepreneurship is not, it's not right for you, it's okay.
That's true.
So,
That's true. Now I met people who they had a side hustle and they wanted to keep it a side hustle. Do
mhm.
you think that, well, I guess it depends on the person, but in your opinion, why did you go full time in your business?
Because I really wanted to bet on me. It felt like me going full time. I felt like my 9 to 5 was a crutch. I felt like I
Mm,
wasn't putting everything that I could to reach my fullest potential. So I needed to prove something to me and the clients that I served. So my passion was more into my business than it was in my 9 to 5. And I wasn't being fair to my corporate employer. I I was there in body, but not in spirit.
mm.
So I was being unfair to them and I was being unfair to myself and to my clients. So I just wanted to bet on me. That's why I decided to do it.
I like that. I like that because again, it can't be a crutch per se, even though it can be a safety net. But if you feel like you're confident in your abilities, you have the clientele, you have the need and the want for your services or goods, why not jump all in, right?
Mhm. Right. But I say that with caution though. Only jump all in if you have the financial sustainability to jump all in.
Right.
Because if you jump out there and your business is not fully built, and then you're looking for your friends and other people to support you and they don't, and you have this large window that you don't have the financial. So my number one objective, my number one piece of advice is to take the leap, but do it when you're financially sustainable. Drive and passion will only take you so far, but then the numbers really tell the story.
That's
So
true.
yeah.
So talk about the challenges that you think your clients that you've seen your clients have in terms of accounting.
Okay. So this has been the hardest year, for almost every business owner for COVID-19. Now, there's some industries who have profited off of COVID-19, but then there's some businesses who have really suffered. But what I've seen a lot of is that, especially when it was time to apply for funding and for loans and for the idle loans and for the PPP loans, so many people did not have numbers. They didn't have accounting software. They were doing bank balance accounting. Like they just had a checking account and they were doing bank balance accounting, and whatever was in their checking account was what they spent. And then they didn't know from one day to the other what their income or what their profit was going to be. And so that was the biggest thing, is that, and when I talk, because I partner with a small business development center in my area, what they said is so many people were leaving money on the table because they didn't have two things: a business bank account and financial reporting. And so I would have to say those are the two biggest things that I saw, especially during COVID-19, is that people had no accounting software. Number two, they didn't have business bank account. They jumped into business with their personal account, operating business, but did not have to actually have a separate business account. So those are two major things that I saw.
I agree. It's it amazes me how people can start a business without the foundation. It's good that they're doing it, awesome, but I tell people marketing, sales, operation are all important. But without accounting, you may as well close your business
Mhm,
because you can't do the reports,
mhm.
balance sheet, income statement, cash flows. You can't do the tax return because you need the bookkeeping first, the accounting done. You can't
Yeah,
apply for a loan because you don't have financials.
right.
So it's like, and from the outside looking in, I see business owners who I know personally because I've either done some consulting and work for them, and you would think that they're doing good on social media, and then you come and find out, oh, they don't have an accounting system. I'm like, wow,
Yeah.
and I'm
Look,
like,
yeah. And you see, and it's funny, and I don't want to say it's funny, but it's amazing how many people say how much income they have. They say income, but they fail to realize what a profit is. You can have as much income, you can have as many dollars rolling through your account, but if you're still paycheck to paycheck with $1 million, you just broke on another level. And so you broke on another level. So it's just like accounting, having the accounting software and accounting records in place. The numbers tell you the story. They tell you what to do, what not to do. And it's more a proactive approach before you get to tax season. So you're not surprised at tax season. And so it's just, yeah. So it's just, yeah, I've seen, like you said, so many people have these flyers, and I've seen where people, they can bench press 400 pounds. But when we get in a conversation, we have a conversation about their finances, it's a wrap. It's like they're a completely different person. So I always never judge a book by the cover, because you never know.
See, I mean, like I look at a business, for example, and I see people doing videos about their business and stuff, and I'm like, awesome. So I think they're having an accountant or bookkeeper, right? No. And I'm like, in my mind, I'm thinking they're doing good. They got the books in order. They got everything legit. No.
Mm-hmm.
So I've seen the same thing. People don't have somebody doing the books for them. They don't have a bank account for the business.
Mm-hmm.
And then they're trying to do it for themselves. I'm like, no.
And see, the money that they're trying to save by not hiring you or me is the money that they're spending in stress, the time they could be servicing other clients, and the money that they're going to pay at the end of the year, because they don't know what they're doing. So they're either going to pay us or they're going to pay the IRS. So I don't argue anymore. You either pay me up front and I help you avoid some of the tax liability, or you pay the IRS. I don't even argue anymore, Dakota. So
right. Let's talk about the value that we add as professionals, because I don't think people see the value that accountants add. They don't. So talk about that, please.
So I see us, Dakota, as being a proactive measure before we get to tax season. And tax professionals are reactive. Oh, many are, because a lot of people just go to H&R Block, do TurboTax or whatever. And so that's more of a reactive measure. So you do have some people who have tax planners who help them out during the year. But if we're talking about the average business owner, we are the proactive measures. We help them avoid the tax liability. We help them prepare for the financial reports that they need so that they can expand, so that they can get the funding that they need. And so that's why I feel that we are a benefit, because we can help them sleep better at night throughout the year. And that way they're not scrambling at the end of the year for tax season, trying to find every dollar and every deduction that they can take. When, if we were helping them throughout the year, it'd be a smooth process.
I agree. If we do a client's books every month, once December ends, we do 1 month of bookkeeping and it's done. Scrub the books throughout the year, it's done. Opposed to getting the books the entire year that need to be done. Then we get rushed saying, can I have a deadline? Like, all right, so your books are already late. The deadline's passed for you to do an extension, and you want them to give me a deadline?
They get mad at you for them owing so much. And like, you're trying to find, and the biggest thing, Dakota, the biggest thing people leave on the table is mileage and the auto expenses. We can't help you backtrack to get mileage. Now we can help you month to month. Okay, track your mileage, track your auto expenses, track that throughout the year, and so many other expenses. We can't help you go back and find those things at the end of the year. You can try and reformulate it or repurpose it. But I mean, by that time, you still left so much money on the table. And so Dakota, I always say we're proactive. We help them reduce their tax liability throughout the year. And if they don't pay us, Dakota, they're going to pay the IRS.
Right, exactly. So I have a client. All right, so I did the books for her for the entire year, basically. And she had like maybe over 10,000 transactions, if not more, because it's a big client.
Mm-hmm.
So did the return for her, and she owed taxes. She had a CPA go behind me to make sure that I was doing my work was correct. Right. I actually have CPA friends I consult as well, because that's what I do. I do my due diligence. And basically the CPA was willing to overstate the expenses for payroll, because I did the payroll, or it went through the bank account, excuse me. So the payroll expenses were all in there, all withholdings, everything. So the CPA wanted to match the return to the W-3. I'm like, you're going to overstay your expenses if you do that. I consulted a friend of mine in Nashville, Tennessee. He said, you're right. She's going to overstate the expenses. My client, because she was referred to this person, and had working with her with the taxes for like a year, she didn't value my opinion because I wasn't a CPA. Mm-hmm. But I'm like, I consulted with two of my friends who were both CPAs, and I had to back out from that particular return. I said, I'm not going to have my name on that return. You can do it. You can trust her and not trust me. I did my homework. I've done payroll. I've been doing accounting for a while. I value my work. So have you had the experience where people don't value you because you don't have a CPA behind your name? Or, I mean, you're an MBA, but do people not value you because you're not a certified public accountant?
There's some people, and with that one, like I said, I don't argue with anybody. I know my value, I know my experience, and I've actually had to correct some work of some CPAs. So I it still happens, and I allow people to choose for themselves because I know my value and I know the level of work that I'm able to achieve. So, in short, yes, Dakota, I have had that experience. But the clients that I do have, they're willing to pay the fee that I'm asking because they know the value that I bring. So for us, Dakota, there are a lot of CPAs that don't do bookkeeping, right? And so for me, I feel like you and I are a complete package because we're able to do their bookkeeping and make sure that they have great taxes or that the taxes are correct at the end of the year. So I know that was a long answer.
Well, that's fine. That's fine. Well, I mean, because again, I'm not devaluing the CPA. Just like somebody goes to the doctor, right?
Mm-hmm.
Most time you go to the doctor, you see the practitioner, not the doctor, right?
Mm-hmm.
It's not that the person has less experience. They just may not want to get the doctorate degree. Or if they are a doctor, they're a doctor of nurse practitioner. So it's just like, I guess, splitting hairs.
Yeah.
Because I've done work for CPAs, ACPAs specifically, and it wasn't right. So just because somebody's a CPA or not a CPA doesn't mean that they know what they're doing and vice versa. So I guess it just depends.
Yeah. And they were able to take an exam and pass that exam. And so like you, Dakota, hat goes off to anybody who passes that CPA exam. That is not a small feat. So I will get back to it. I studied for it a couple times and having children and marriage and stuff. That just, but I know my time will come. But I'm not pressed about it. So, but I do know my value. I have a bachelor's degree in accounting, 18 years accounting experience, corporate as well as small business. So I'm not concerned. I work with those clients who want to work with me. And if they decide those people who I come into contact with who want to use a CPA, I don't specialize in convincing people, Dakota. And you should.
So we both agree on personal finance. I want to get your take on personal finance. Like most accountants I talk to, well, I actually work for accountants who needed my help with personal finance.
Yeah.
But that's no story. But I want to hear your take on personal finance. Like, how do you feel about like debt and budgeting? Like, what's your take on that? Because I think that's something that you and I have in common, and we can help people with. Because I don't think I've met anybody who does accounting and personal finance for the clients, or who actually are passionate about that. So talk about personal finance, and you want to get your take on it.
Here's the deal, Dakota. Most people jump into entrepreneurship because their personal finances aren't where they need to be. They feel, okay, if I get me a job, if I start a business, if I get me a side hustle, I'm going to have extra income, only to find that their business finances look exactly like their personal finances.
Right.
So that's what I found. That's what I found in the clients that I work with. And so what I did, I found myself saying, okay, some clients need the full package because I can't help you budget your business expenses or your business finances with your personal finances, because so many people commingle, for one, and that's a whole other topic. So many people commingle, but then they're wondering why they're living paycheck to paycheck in their business. It's because they're living paycheck to paycheck in your personal finances. So I think personal finances are so important. Debt, some debt is good debt. And so I would say that I hadn't always had that. I hadn't always had that view. Some debt is good debt if you know how to manage it. Not everyone is disciplined on how to manage it. And so I've taught financial peace with Dave Ramsey. No debt, like we've been on a debt snowball for a while. So we're advocates for that. But I do know as it relates to business, let me say, as it relates to business, some debt is good debt as when you want to expand and you want to grow to get capital. If you're not at that place where you have the actual cash flow to sustain it. So, but that's only if you have the discipline to do so and you're able to knock it out. Personal finances are so important, Dakota, but I had to get away from it. I told you that. So any of my personal finance people that, I'm already referring to you, Dakota.
Well, like in my experience, I say to people, yeah, your business finances mirror your personal finances. And because they do, they go hand in hand. If you make money, take it home, you're going to spend it the same way you spend it. Well, you're going to spend your business finances like you spend your personal finances. So it's important. My take on debt, like, I hate it.
Oh no, I do too, Dakota. I don't know. Yeah, go ahead.
Like, all right, so I'm gonna say this. Normally, I'll talk about the black and white issue, but I'm gonna talk about now. In terms of financing, all right. They say in the black community, like financing, gaining capital is something that black folks struggle with, right? So I have a solution for that. People may agree with me or not agree with me, but this is my solution, my opinion. And if they want to be wrong, that's fine. But I think 2 ways people can raise capital. I said 2, not 3. 2. First, use YM, your money. That's right, your money to fund your business. All right. Secondly, get paying clients. Those are only 2 ways, in my opinion, you can get money, because my business is debt free. Like, I don't have any debt. In fact, I did research. JCPenney, the owner of JCPenney, the store, this dude was a billionaire in his business until before that, even before they started offering credit. He was a billionaire before he started offering credit. And this was like in the 50s, I believe. So his business was cash based. So again, you can raise capital. People who listen to my show, if you are struggling, if you're a black person, or even if you're white, whatever, if you think you need to raise capital by borrowing money, because the first thing people say is, build your credit, build your credit, build your credit. I'm saying to you is, YM, use your money. If you have a side hustle, use your money from your W-2 wages to build your business. 1, 2, get people who want to pay you what you are worth.
Yeah.
Shonette, your thoughts?
Oh no, you already know my thoughts on that. I've gone down that road. I've experienced, just like the entrepreneurs on the other side of this conversation. I've been there, done that. I've been devalued, and I've allowed people to devalue me because I didn't value myself. So it starts with each one of us and each one of them valuing themselves. And so that's where it starts, to charge that much, to charge the fees that they work. But so back on the debt conversation, Dakota, because you and I have the same heart. I don't do debt. I've been operating on cash basis as well. The first time I got a loan was for COVID-19. It was for COVID-19 when the PPP and the EIDL loans came out. Now, mind you, I didn't do the EIDL loan because I knew that the EIDL loan, although it had a very low interest rate, I didn't want to get it because I know it was long-term debt. Now with the PPP being free money, I went for the funding. And so one of the things my clients, because I talk about debt and say don't get debt, so many of them were afraid to apply for it because I've harped on it so much. But in that instance with the PPP, I would say because it was free money and because it was going to be forgivable if they use it properly, that was when we actually incurred debt. But that's going to be forgivable.
Talk about the debt thing, because I found it hard for me to really put to personal finance business, because it's a niche business. Because if I'm coaching somebody, my goal is to get them out of debt. But most people want to stay in debt. I mean, I asked a question in this group in Nashville. I said, if you all didn't have any debt, how would you feel? I guarantee you about 95% of people said, I feel free. So I said, I offer a class, right, to help people to basically learn how to handle money, how to get out of debt. Do you know not one person signed up for the class? I had like hundreds of people, not one person signed up. I'm like, So people love debt. And I think because it's so easy to get into, and people don't want to wait for things. They want to get things now. They want to get real estate, flip houses, but they don't see the risk side of that. And 2020 was a big risk.
Yeah.
Because people lost jobs, businesses closed, and people still borrow money. Oh yeah, go get some debt. And I'm like, what did y'all learn during that time period?
Yeah. And then I go back to the word, using it responsibly. And so a lot of people being issued credit when they already, I would not advise anyone to get any credit if your personal finances are already in shambles. Debt won't help you. It would only adding on top of the issue. And so, right. So I we have the same heart to go. So I agree.
Any final thoughts before we close? Like, what can you give the audience in terms of business, being a mom, entrepreneur? Like, what can you leave the audience with?
I don't know. So as an entrepreneur, like I said, when I started, it's a place of vulnerability to hire a bookkeeper or an accountant. It should be someone that they like, know, and trust. And so that's the first step. And I would say that so many people listening to this podcast have made mistakes. And I would say it's never too late to begin again, because you don't know what you don't know. You didn't know what you didn't know. It's never too late to begin again. And for those people who are mompreneurs, and some dads work at home with their kids, I would say I won't say there's no such thing as balance. I would say I haven't achieved balance. What I would say is prioritizing. You have to prioritize what's most important at the specific given time. And so those are three things I would drive home, Dakota. And the last thing is, and I said that was the last thing, but the last thing, this is really the last thing. If you do not pay for an accountant, you will pay the IRS. So and that's what I tell my clients and anyone who seeks my services, who are inquirers. Okay, you don't have to pay me. You really don't. And you don't have to pay another accountant. But if you don't pay us, you'll pay the IRS. So you choose. You decide.
I agree. So how can people find out about you and your business on social media and online?
So you can visit me at www.theshekinahgroup.com, or you can visit me on Facebook or LinkedIn or Instagram at Shonette Sullivan.
Awesome. So thank you for your time, Shonette. And this is the Your Money Hour podcast. Thank you for listening.
Thank you so much, Dakota.